Crypto fear and greed index is between 16 to 25, and stable coins are contracting for a long time. ETF shows a multiple outflows throughout this week. The important question that real people currently asking is where actually the liquidity? The answer is liquidity is not gone, it actually parked in somewhere else. It is sitting in stocks, safe havens, and other short-term trades where they are waiting for a reason to rotate. Bitcoin doesn't need new money, it needs capital rotation. And right now, the rotation still not happened yet. My name is Saleh. I am doing the macro crypto analysis in this channel. Today, in this video, we are going to uncover one of the major theses that most of the people just forgotten after a long bear run. Bitcoin is not waiting for liquidity. Liquidity is actually waiting for a reason to leave stocks. This is the most important thesis we are going to explain in this video. We are not in a liquidity crisis. We are actually in a liquidity misallocation. Currently, the capital is now moving towards silver, gold, and equity, and everything is now all-time high right now. And Bitcoin is not moving just because of its weak. It is being bypassed because the other assets are absorbing the marginal liquidity available in the market. In this video, we will break down where is actually the liquidity and why it's not flowing into Bitcoin, and what are the specific macro aspects that push back Bitcoin, and most importantly, why extreme fear with less liquidity is actually a contrarian, not a capitalization. As you know, the M2 money supply is the actual way you can track the liquidity in the market, right? So the current global M2 money supply is at around $130 trillion. This is currently at all-time high right now. That means the liquidity is not gone everywhere, it's still there. And US money supply is at stable rate and growing around 3 to 4% year over year. Interestingly, the Fed ended the quantitative tightening on December 2025. They were already started cutting rates since late 2024. This is actually a favorable liquidity environment for assets, but interestingly, Bitcoin still didn't get the benefits yet. As we know, the capital is already existed. So where actually the capital is now? The first pocket will be the equities. Equities at all-time high right now, and tech stocks are already rebounded, and Bitcoin's correlation between S&P is now around 0.73. At the time of stock rally, the risk capital that stayed in stock will always stay in stock. The chance for moving that into Bitcoin is very less at the Eurofic phase. And next, safe havens was gold and silver. Gold rallied around 5,600 in late January before pulling back to 5,200. That's literally 65% gain in gold for 2025. The pattern you can recognize here is that investors are actually choosing gold instead of Bitcoin for inflation hedging and risk of positioning. Third position where liquidity trapped were stable short-term trades and money markets like poly markets. Currently people were thinking that why do you need to risk your most of the capital in Bitcoin's volatility? We can literally get 4 to 6% risk-free in a treasury bills, and that was also one of the main concerns. So if you are looking into the stablecoin market cap, it is literally contracting for a long time. Combined USDT and USDC market cap is went down to around 257 billion. That's actually down from 265 billion in mid-December. That's exactly around 7 billion in loss in stablecoin market. USDC alone dropped 6 billion in 10 days. This data means money is not actually rotating into the crypto, it's actually rotating from the crypto. Now let's discuss some of the macro aspects were inducing more fear into the Bitcoin and crypto. You can see on the poly market, the debates are going very aggressively for the past couple of weeks for the next Fed chair, and everyone will expect that Trump will announce the next Fed chair very soon. And interestingly, Kevin Walsh have now around 87% chance to become the next Fed chair. That actually a hawkish signal, because Walsh is more restrictive to the monetary policy and cutting rates. He's not like Rick Rada. That poly market scene will impacted the Bitcoin price. It went down from 91k to 81k in hours. That's actually 10k drop. This actually shows that Bitcoin is now reacting more to the liquidity expectations other than stock and gold. CoinDesk analysis shows that there is a deeper resistance at 85k, and this cascade just broke that resistance, and you can see that the next resistance is around 75k. So we should likely to see the bounce from 85 to 75k for a couple of days after this. And next macro aspect is the price action sentiment. Bitcoin is tried to break the 90k resistance for a couple of times in this month itself. It's briefly topped to 92k. They can't survive, but Bitcoin can't survive at that point. That technical setup induced a bearish pressure on the Bitcoin. This will give us a key insight. This actually reflects a fear-heavy market sentiment, not an optimistic scenario here. From now onwards, market need a clear data that liquidity will be moving from the stock or any other assets and Fed policy will ease. That will be the only risk-on sentiment in the case of Bitcoin as the data says. Now institutions are showing much more caution on Bitcoin right now. In the start of January, we saw around 1.6 billion in inflows, but at the same time, within days, we saw around 1.2 billion in outflow. That means it's around net zero. January 6, 7, 8 and all these days, we saw around more than 400 BTC was selling in each day. This means institutions are not selling, but they are still be cautious. And Wells Fargo have around 491 million exposure, Morgan Stanley around 724 million, JP Morgan 346 million. These all funds are right now in a stable mode, not growing, it's literally in a sideline. Even though we saw around some risk-on rallies in the couple of weeks, but it still bounced back and fall further. The interesting fact here is that the small risk-on rallies doesn't mean the liquidity is expanding, where Bitcoin is more correlated to liquidity. These risk-on rallies actually mean the asset rotation on the same pool of capital. When S&P rally around 2%, that doesn't mean Bitcoin will get another 50 billion inflow. It actually means capital is rotating either from bond or cash to a stock. There are actually three things that we need for Bitcoin to actually show a healthy run. That is liquidity expansion and rotation out of equities to other assets and the break of the psychological price level. That means the 90k level and then the 100k level. And none of these things are happened yet. Even though we saw that there is around 0.73 correlation between Bitcoin and S&P 500, but the Bitcoin is actually lagging behind the stock. But when it comes to sell-off, the stock sell-off, the Bitcoin sell-off will be much more harder. This correlation is actually mean the Bitcoin is now treated as a high-risk beta asset right now. You can consider the Bitcoin as a high beta tech stock with no earnings, that's it. In order to really run Bitcoin, the institutions actually need a further confirmation from the risk-on rally, not just a risk-on environment. Right now, the macro aspects like the Fed decision and Trump's new Fed chair thing is actually lagging the confirmation. So the most of the people are just in a wait and see mood right now. There is actually a hidden gem that very few institutional people are watching very closely. That is actually the stablecoin supply. The stablecoin supply is one of the best leading indicator of crypto prices. As we know, the liquidity is one of the most important aspect for Bitcoin. You can consider as a stablecoin supply as one of the important aspect you need to check only in the specific case of crypto. When stablecoin supply contracts, that actually means Bitcoin price is going down, means there is no enough liquidity. We are actually in a contraction mode since mid-December because we saw around -7 billion in stablecoin supply. And you can see the pattern in mid-2024. In that case, we saw an increasing in the stablecoin supply. After that, Bitcoin rallied. And it's same in the late 2023. The USDC and USDT supply expanded ahead of the ETF launches. So the current situation means that liquidity is now moving away from crypto and going to other risk-on assets. If you look into the Bitcoin's 24 hours trading volume, it is sitting around 42.7 million. Even though this is consistent over day-to-day average, but it's actually a passive volume. The crypto spot volume fell around 66% from the 2025 January peak. And now exchanges are reporting there is a huge declining in the spot trading as we heading into the 2026. Long volume, extra fear, sideways price, that actually means there is no sign for either going up or going down. This is actually a waiting market scenario. Now here is what gets really interesting in the perspective of contrarian setup. It won't happen immediately. When sentiment bottoms, and it will reach a point where the capital have nowhere else to go. Right now we are seeing fear and liquidity mismatch, not the outright capitalization. We have been in the fear zone from the last November 2025. It's almost 2 months right now. Bitcoin didn't bottom immediately. It will chop around for weeks before it getting a momentum. How do you identify when the Bitcoin sentiment will really bottoms? There should be 3 things will happen at that time. The first thing will be shorts get skewed like how the longs get skewed previously. The over leveraged buyers will get forced to recover. The second point is the buyers with extra money will enter into the market. And the main thing, the liquidity will start flowing from the stock to Bitcoin. But we are still not reached the bottom yet. We need to wait for this signal to identify the major trend changes. Let's check out the data points that will relate to this scenario. On November 2022, Bitcoin was at 15k. That was in an extreme fear zone. The stablecoin supply was stable. At that point, the institutions are building the positions very quietly. The 3 months later, Bitcoin reached around 28k. That's literally 80% rally. But on March 2020, COVID crash just happened. Bitcoin literally went to 3,800. There was a panic everywhere. But at that point, the M2 money expansions were introduced. With that M2 money expansion, by December 2020, Bitcoin was just rallied 660% and it was stood at 29k. The pattern is clear. The extreme fear plus contracted liquidity means we need to wait longer. Right now we are actually in a transaction phase. There is an extreme fear, but we are uncertain about the liquidity right now. We need to watch very carefully what will happen to identify the pattern. You need to watch the fear indicator as a contrarian indicator, not as something that really bad. When fear and greed index stays extreme fear zone for a long period, then oscillate back to a neutral point without any breakout, that actually the preparation for liquidity rotation and trend reversal. Current reading is around 16 to 25. We need to watch it is reaching around 30 to 40 range without any external factor. The second indicator is stablecoin supply. You can consider this as a real-time liquidity indicator. Now it is contracting around minus 7 billion since mid-December. This suggests most of the capital is still in fiat, not flowing into the crypto right now. You need to watch the point where the USDT plus USDC market cap gradually increasing. Historically, 2 to 4 weeks of stablecoin expansion actually precedes the Bitcoin rally. When you see 2 to 3 weeks of stablecoin supply growth, that actually a conviction signal. And next signal is ETF flow growth. As of January, we saw around net zero ETF flows. We need to watch for multi-day directional streak, not 1 or 2 days. We need to watch for consecutive 5 to 7 days of inflows. That actually means the institutions are accumulating. When you identify the institutions are accumulating, that's actually a huge signal right now. And other point is macro liquidity events. The macro liquidity event currently mainly depend upon who will be the next Fed chair. If Vash just elected, that is one of the hawkish sign for the liquidity expansion. We need to watch that very carefully for identifying whether it's a dovish or hawkish sign for the M2 liquidity based on the next Fed chair. M2 growth rate is currently around 3 to 4% stable right now, but you need to watch for the acceleration. If M2 global growth moved to 5 to 6%, that actually a expanding liquidity environment. You need to watch that percentile. And other point is treasury issuance plan. More debt issuance means more liquidity into the market. And other thing is rate cut. If Fed signal more cuts, that is a bullish sign. If Fed announces less cut, that is actually a bearish sign. And we can also consider the technical aspects as a macro thing as well, because this will trigger the institutional algorithms. The key levels you need to watch in the case of resistance and support is that we saw that 85k support is just failed now it will act as a new resistance, and there is a 90k major psychological resistance there. Multiple failed attempts were already occurred in that point. If Bitcoin hold above 90k with a huge volume, that is actually a bullish confirmation. If Bitcoin break below 75k, deeper corrections like around it may bend down around 65k. So what actually the conclusion? Bitcoin is actually in a post state. Sentiment is actually in a fearful way. But even though the liquidity is there in the market, but it actually sidelined. Global M2 money supply is at all-time high right now. It's around 130 trillion. And interestingly, the stablecoin supply on other hand contracting around minus 7 billion. That means capital is leaving out of crypto. And fear greed index is below 20. That is extreme fear, and it is sustained for 2 months. So this is not actually a capitalization. This is actually capital waiting for next direction. Like waiting for stocks look like less attractive and bond paying less yields, and waiting for the Fed announces more easing cycle or etc. etc. The thesis is here is that instead of asking when Bitcoin will rally, we need to ask when the point where liquidity will find Bitcoin more attractive than stocks and gold and silver. Because until that rotation happens, Bitcoin price will always be in a range bound mode and sentiment will be always in a caution state. This is not actually in a bearish sentiment for a long term. It's actually a short term realistic bearish scenario. So what this means as you as an investor? For as a long-term investor, you can consider this literally as a noise. The Bitcoin's fundamental narrative is not even changed. The 21 million market cap, institutional adoption, and the ETF infrastructure. The extreme fear with stable global liquidity is the actual, or you can say better entry point than the euphoric phase. If you are an active trader, you need to wait for the confirmation for finding the better trend to trade. Watch stablecoin supply expansion with multiple day ETF inflows and watch 90k is break or not. This is the actual point where institutions will start accumulating, and even it is the start of a physical year. From the summary, the contrarian edge here is that fear is not actually a bearishness. Fear equals opportunity when at the time of sustained liquidity. Right now, the liquidity is not contracting, it is stable and waiting for further moving up. When it started rotating, you will see it in a stable coin supply and ETFs, etc. etc. This will be the point where Bitcoin will move from the 80k range to the 100k range in weeks, not in months. This setup is actually building, but we are actually not yet there. Market doesn't reward the impatience, market rewards who actually prepared. The extreme fear is right now is your preparation zone. The liquidity rotation is now your execution signal. Right now we are in a preparation mode. If this macro breakdown is helpful for your crypto investment, feel free to subscribe. We will cover Fed policies, ETF inflows, stablecoin supply, institutional positioning, and market structure in a detail in this channel. Thank you for watching. See you in the next video.